Hello everyone and welcome to my morning pot analysis videos on Monday the 11th of February with me, which is Market Analyst at Hantec Markets. Got a relatively strong dollar that's actually coming through today. We've got euro dollar lower, sterling dollar lower, dollar yen higher through 110 figure, interestingly. I'll show you the implications of that potentially coming through in the chart analysis videos. Gold back, and also just generally speaking, we've seen an interesting sort of decline in risk appetite on Friday that's subsequently rebounded today. Now, lower risk appetite tends to support the dollar, but the dollar's actually performing quite well in spite of the fact that we've got strong moves actually early doors on these equity markets. Rebounding now, 11,000 is a key level to watch out for on the DAX, and that's the big medium-term pivot. So it's been fluctuating around that 11,000 level all day. And it's just dropped back actually the last few minutes, but that is a key level that we need to look out for. In terms of why we've seen that risk appetite improvement, I mean, we've got these this US-China trade dispute negotiations going on again this week. They're talking. They've got meetings in Beijing this week, so they're sort of waiting out for how those meetings really progress. But it doesn't seem as though at the moment there is any real need to go especially strong on risk appetite, considering the fact that Donald Trump has been recently saying that he's not going to be meeting with President Xi of China before the end of the deadline, which is on the 1st of March. So it's interesting to see that risk appetite has actually ticked higher this morning, even despite that. But generally speaking, what we're seeing is equities higher, dollar higher, which is not normally the way round you'd see it. Dollar actually has broken out this morning to the highest it's been since early Jan. Now risk appetite, well, volatility ticked higher a little bit today, but generally speaking, what you'd see is volatility falling with equity markets rising. So it'd be interesting to see if that relationship actually starts to turn around again. But in terms of how we're set up, we've got bond yields which again have sort of edged a little bit higher from a low level that we saw on Friday. Bond markets have all been in decline on yields, certainly in the last week or so. Now a little bit of an unwind of that move certainly sort of has come with the improvement in risk appetite, but again, how sustainable is that is the question that everyone really needs to sort of consider. So in terms of data points, today we've had out the UK growth data for Q4, which actually a little bit slightly weaker than expected on the growth numbers, whereby we saw quarterly growth at 0.2%. The year-on-year data was 1.3, down from 1.4 expected. But also we've seen sort of manufacturing data and industrial production all coming in weaker than expected as well. So generally speaking, not great for sterling, and that's one of the reasons why we've seen sterling underperforming today, although it has actually rebounded a little bit. It's still an interesting level to watch out for, around 29.20, and again I'll talk you through the implications of that on the chart analysis videos. Other than that, there's no real data points today. Now, my chart of the day is the Euro Kiwi. Now, we've got the Reserve Bank of New Zealand reporting this week. Now, in front of that, we've seen the Euro Kiwi rallying back within this downtrend channel again. Now, is this going to be a trend channel that gets broken to the upside? Well, it's interesting to see that the resistance came pretty much bang on that old low, which is a bit of a pivot over the last sort of few weeks. The resistance on Friday came at 68.50 as the market just rolled over. But you do have this improvement in momentum indicators, stochastics and RSI, sort of ticking back higher. RSI at 50, MACD lines also rising. Suggests that there is an interesting sort of improvement that we have seen, and it depends on whether we can see the rally holding on. Now 67.50 has been a bit of a pivot level in the last few weeks. Old resistance becoming supportive, and then it seems to be breaking back above that level, having been a base of resistance overnight, breaking back above that level, which is positive. So you've got the momentum indicators which have unwound again, but again starting to tick higher on the hourly RSI as the move above 67.50 has taken hold. Now 68 figure is a lower high. That's the overnight resistance, and then that's underneath 68.50, which is your sort of key level of near-term resistance. A breakout above 68.50 really does start to find a bit more of upside traction for that move, and then sort of looking at the challenging the lower highs that we posted through January. It certainly looks as though there is an improved outlook that we're sort of coming through on the Euro Kiwi level. Now, again, you'd need to see that move holding above 66.50 really to suggest that the improvement is going to be more sustainable within this rally. So yeah, it's an interesting moment, I think, for Euro Kiwi. So I wish you good luck in your trading today, and I'll speak to you later.